If you've ever been in a car dealership browsing for cars, you'll probably hear a salesperson ask you the question, how much per month are you looking to spend? And if you've never bought a car before or know how the car buying game works, you answer pretty honestly and you might say something like, I'm happy if I pay between $500 to $600 a month. The moment you reveal your number though, you've lost the game and you've actually cost yourself upwards of thousands of dollars. You see, there are many ways to finance a car, but if you negotiate based on the monthly payment number, you're allowing the dealer to rearrange every variable in the deal for their benefit. The price, the loan term, the interest rate, and add-ons, they all can get shifted so that your payment looks the same at the end of the day, but on the back end, you're actually paying a lot more. I'm going to give you some examples of how they do this, and then we're going to also discuss what to focus on instead when you go and buy a car. So let's say you're in that dealership and you've already revealed that your upper limit is $600 a month. The car you're looking at retails for $27,000. So something like this Subaru Crosstrek, which the MSRP is $26,995. The estimated monthly payment here, if you finance the entire price of the car, so no money down, is $528 a month, assuming you finance it for 5 years at a 6.5% interest rate. So that's right in your budget range of $500 to $600 a month. And that's actually closer to the lower bound. And the problem is that if you don't do any research on your car buying ahead of time, what the dealer can do is pretty sneaky. They might steer you towards a higher price trim or perhaps add products like a dealer package with tinted windows and floor mats that you didn't really ask for. And they're going to do all this to try to steer you towards a $600 a month payment as much as possible because that's what you stated your upper bound was. They're not going to tell you that you were already under budget at the listed price initially. So the entire sales process here is designed to keep you focused on the monthly payment instead of the total cost of the car. So let's look at the 4-square worksheet as an illustration. This is a worksheet that a dealer might show you. It has 4 quadrants: the trade-in value in the top left, the vehicle price in the top right, the down payment, and your monthly payment. It looks pretty straightforward, and if you're looking at this from a car buying perspective, your eyes probably go straight to the vehicle price in the top right. And that would be pretty logical. That's pretty much all that matters, right? However, what the dealer wants you to focus on is the monthly payment number in the bottom right, which in this particular example is way too high. This worksheet as is looks really simple because there's only 4 numbers on it right now, but as negotiations start to progress, they might start crossing out certain numbers and replacing them with others, changing your loan length and your down payment in order to get you to a lower monthly payment. And by the end of it, your worksheet might look like something like this. Notice in the bottom right quadrant that your monthly payment was $845-ish a month for 36 months, but somehow it dropped to $476 by the end of the negotiation. But if you look at the vehicle price, it doesn't really move that much. It went from maybe $34,000 OTD or out the door to $33,980. In this case, by looking at this sheet, it looks like the loan terms just got extended, but it doesn't really mean you saved that much money on the price of the car in reality. Now, dealerships might not have this exact 4-square worksheet, but they're going to have some sort of version of it. So, perhaps a deal sheet, a printout, or they turn a screen towards you, and the goal is always the same to try to get you to think about the monthly payment. It also doesn't help that this deal sheet is probably presented to you after being at the dealership for already a few hours. So that means you're already mentally fatigued. You just want to drive the car home and you're more likely to agree to something that you might not have wanted originally. A second way that dealerships can use your budget against you is simply by marking up the interest rate on your car loan when you apply for financing through their dealer. In fact, this is really well documented. There have been lawsuits against automakers for interest rate discrimination, like this case from 2015 against Honda. The DOJ reached a settlement with Honda because they were engaging in a pattern of discrimination against minorities when it came to auto lending rates. Now, the discrimination is one thing and obviously not very good, but if you read this press release, the fascinating part is just how it outlines how standard of a business practice marking up interest rates are. So, I quote, Honda has agreed to change the way it prices its loans by limiting dealer markup to 125 basis points or 1.25% for loans of 60 months or less, and to 100 basis points or about 1% for loans greater than 60 months. And if you read further on in the release, it states that Honda, like most other major auto lenders, lets the dealer change your interest rate from what you actually qualified for. That means that dealerships just have the discretion to charge you more for their own gain. So let's say you qualify for a 6.5% interest rate on the $27,000 car from earlier, the Subaru. The dealer might come back to you and say, congrats, you've been approved for a 7.5% interest rate. And you think to yourself, well, I think that's the going rate right now. But if you were to actually do some research and you know that by taking an extra 1% interest rate on that loan, you're paying an extra $764 in interest over the course of that loan, and your monthly payment is now higher as well. Now, that's just a 1% interest rate hike. Some dealers can mark up your interest rates even more by up to 1.5 to 2.5 percentage points. Now, true story, I actually went to a Toyota dealership over the weekend, this past weekend, to help my friend with her car, and the financing rates that they had for cars were astronomically high. They were between 6.9 to 8.9 to even up to 9.9%. On bigger loans, that can add up to thousands of dollars of interest. And you'd never know this if you didn't do any research ahead of time. Alright, so what should you do instead? I have 5 actionable steps that you can take before you go and step foot into any car dealership. That's going to save you a lot of money. The key here is that you need to spend about 30 minutes prepping before you walk into any dealership. Knowing some basics about your own financial situation as well as what a car should go for and the interest rates will save you thousands of dollars. The first step is to know what you can actually afford before you walk into the dealer. So in our example conversation from the beginning of this video, I said you might walk into a dealership and say that your budget is between $500 and $600 per month. If you say a range like that instead of an exact number, that's a signal to me that you don't know your exact number, and you should really know what that exact number that you can afford on a monthly basis is. A good rule of thumb to follow is the 24/10 car buying rule. That's where you put at least 20% down on a car. You finance a car for no more than 4 years. And you make sure that your total monthly car cost, that's your payment plus your insurance, it doesn't exceed 10% of your gross monthly income. So if you make $84,000 a year, that's $7,000 in gross income per month. Therefore, your total car cost should be under $700 a month, as an example. Some people find this really difficult, so they stretch the car loan to 5 years instead of 4, and that can make it more tolerable. However, just know that if a car doesn't fit your math on a 4 or a 5-year loan, it's probably too much of a car for you financially. Once you know what you can actually afford, step 2 is that you should look into financing options in terms of loans before you go into the dealership. In the real estate world, you can get pre-approved for a loan before you buy a house. And you can actually do the same thing in the car world as well. If you go to your bank or your credit union or even an online lender, you can apply for a pre-approval letter on a car loan of say $27,000. Banks will then tell you what you qualify for and what their interest rates that they can offer you on that type of loan are. This actually gives you a lot of negotiating leverage because it's going to signal to the dealer that you're a really serious buyer. You have your baseline interest rate to compare against the dealer's financing offers. And a common misconception is that people think that they have to go with the dealer's financing options for their interest rates, but really you can go with any lender that gives you a loan. The way that this logistically works, if you're curious, is that the title of the car is going to list the lender as the lien holder. You're the registered owner of the car when you buy it, but the lender has the legal claim on the car until the loan is paid off. The lien holder in this case can be the dealership that's offering you financing, or it can be your bank or your credit union. The other perk about getting a pre-approval is that it streamlines the process at the dealership. So, a good amount of time that you're going to spend in a dealership is going to be talking about financing. Doing any groundwork before you get to the dealer will end up saving you a lot of time as well as any headaches. Step number 3, and this is probably one of the most important, is that if a salesman ever asks you what monthly payment you're looking for or what your monthly budget is, you really just want to counter them with, I don't really care much about the monthly payment. I'm just more focused on the overall price. If you say that, that's going to help a lot. And if they ever try high sales pressure tactics on you, you just want to say you're not ready to purchase today yet and you want some time to think about it. You basically want to intentionally slow down the process if you feel things are moving too fast or they're trying to use urgency tactics against you. You can always negotiate over email or text. And if you're really interested in the car, just know that you don't have to commit to it right then and there. I think a lot of people just go to the car dealership and expect, okay, I'm going to get a car today and I just want to get this task off of my list and I don't really want to come back to this place again. But if you can exercise some patience and you're able to set some limits for yourself and know that you can go back at any time or to any other dealership and get the same or similar car that you've been looking for, it's still going to be there for you. Step number 4 is to keep your car loan to 60 months max. With the average new car loan these days being between 69 to 72 months long, dealers are going to try to get you to these longer loan terms as well. But the longer the loan gets, the more interest you're going to pay. And there's a second problem, which is that on a longer loan, you're at risk of being underwater, which means that you technically owe more on the car than it's actually worth. So if you need to sell or the car gets totaled, you're paying out of pocket to cover that difference. And step number 5 is to handle add-ons separately or just say no to them altogether. You just don't want them being lumped in together with your total purchase price. When I've personally bought a car before and the price has already been negotiated upon, you get to the finance manager's office and that's basically where they try to sell you the second list of items, which is usually extended warranties, paint protection, wheel protection, fabric coating, gap insurance, and whatever else they can roll into the loan. When you get to that finance manager's department, you just really want to say no to almost everything that they try to upsell you on. One exception might be gap insurance. This is basically when, let's say you owe $20,000 on a car, but the car might be only worth $15,000 if it's totaled. That gap insurance will pay the remaining difference if your car ever gets into a pretty bad accident. But even with gap insurance, you can decline to get it from the car dealership and just call different auto insurance companies and get it yourself instead. And if you really want the extended warranty, I would just say don't buy it right then and there, especially when you're buying the car with all that added pressure. That's something you can definitely wait on. You can think about it and decide to buy it later if you really want it. Alright, so the next time you walk into a car dealership, if you've watched this video and prepared yourself, you will be ready to go toe-to-toe with them and get the best deal possible. Some resources that you can look into in order to get as prepared as possible is to check out the edmmans.com, car forums, cargurus.com, and any other websites that I will link down below in the description. Let me know what you thought of this video in the comments and share your car buying experiences down there as well. And I'll see you guys in the comment section or in the next video. Alright, peace.